Good morning, ladies and gentlemen. Everybody, welcome back to another stream. Good morning. This can be a good day. So far, the markets are holding pretty well in this dip. Markets are trying to essentially move higher here to, again, what I believe to be about 310. Maybe not. Not today, but ultimately, I think that's essentially what the market's trying to do in the short-term perspective, is really get back up to about that 310.47 price for right now. First thing we're going to have to do is we're going to have to get through our standard deviation mark here at 298.44. Our trending resistance in the middle here. Through that can kick off kind of our next little bullish move, maybe up at 310 essentially. All right. So good morning, Jack, wada Maki, wada, Dave the Medic, Kelly, Ryan, Ryan Bailey, nice. All right, guys, so we're going to get started here first with the SPY. We're going to be more long biased to maybe consolidation day, kind of something similar to yesterday, right? You see a company on a long move, then we fade back down, and we went into a bouncing fashion, kind of chopping around a little bit. So think we're going to see something similar today, or I think we might break up. That's kind of it. Where we're sitting on the 4-hour in the daily chart, it just doesn't seem like we're going to be going down, right? So I think you got to look to a long day, consolidation, long day, maybe a breakup day. I think is going to be the appropriate approach today. All right, so overnight, and part of the reason I say that is because overnight, we dropped all the way from 297 back down to 294. So we went specifically from the high of the channel to the low of the channel, and now we're getting bought up in the low of this channel move, and we're getting bought up, and we don't have arguably that far to go before we get to 297, 298. Right now we're at 295. Say market opens at 295. I think the average true range for the SPY right now is $7.48. So you have an average true range on the S&P 500 of $7.48. So if we open here if we pretty much kind of stay flat around here and then we open around 296.50, I mean, you still have another 4 points or so the market can probably run in one direction or the other. That being said, I mean, 299, 291, you might even be able to see today. So I think markets have the potential to get back up towards the 298s today. That being said, I'd be a little bit more long biased probably going into the open for now. And then I'd just be more short biased on the day once you get back up to, 299s if you do get there. Okay. Also, say something really odd happens and the market does a weird move down, right? I don't see it because we kind of have an inverse, right? I don't see the markets going low right now. But let's say something weird happens, right? We have an inverse head and shoulder too. That's why I was I don't really see them going lower, right? So you have the perfect inverse head and shoulder off supports, right? So you go down, bounce support, back up, test resistance, back down into the lower buying cycle of the channel, have standard deviation mark, bounce up, hit resistance, back down, hit support, break up, back over this. So neckline kind of zone. So there's an inverse head and shoulders into the low cycle pre-market, into the buying zone as the daily chart and the 4-hour chart look bullish. I don't see a reason to be bearish, but if I'm somehow wrong, and we're all wrong, and the markets do go down, I would say look at the 294.38 level as your first dip buy on the day if the market went down. But I don't see that. But if it did, that's what I would do. Okay? So for now, I see inverse head and shoulders, a little bit more long bias going into the open for now. The new is, let's see. Honestly, so USO is just a company that basically trades the futures, basically. Yeah. That's what they do. They don't take physical possession of any of the oil. They basically just deal in contracts. So again, that's I have no idea. Because so basically if oil demand picks up, then if USO bought a bunch of oil, so pretty much understand this. What happened to USO was like an anomaly, okay? So I would expect maybe like a slower return or slower growth from USO. And this is just me playing around with just simple concepts, okay? Okay, I would expect a slower return. Basically, like you saw here, maybe a little quicker. Maybe a little quicker because we had such an aggressive move down, but we're going to see probably a recovery very similar to this move from like 87 to 109. Okay, we're probably going to see something just like that. I don't want to say just like that, but something similar. And the reason I say that is because honestly, just think about you can almost think about USO as like a recession. Seriously. In a recessional period, a contraction moment in the economy, it can happen for numerous reasons, right? It could happen for numerous reasons. Now, when it does happen, it usually happens fairly quick. Jobs are lost. People sell homes. Things happen quickly. Money is lost quickly. Money is recovered slower. So that's normally why we see markets go down so fast, just because the panic and the fear and when the cards, and also because we've somehow conditioned human beings to living in a world that's used with debt. We leverage ourselves with debt for some reason. Someone somehow someday thought that was a good idea, but it never really is. But somehow we did it. But anyway, so we live in a really big world of debt. So just all the things that we do accompany a fast contractional period in the market and in the economy. And when that happens, right, people lose some money, things go ugly. And then the recoveries are slower because then people get jobs slowly. Companies just don't go back and hire 9,000 employees that they just cut off because the business just doesn't come back that fast. Because in order for my business to make money, I need your business back up and running. And if your business isn't back up and running full speed ahead like it was prior to, then I'm not getting as much money from you, which means that I can't hire the same people I had. And so it's just all a domino effect. So the dominoes fall very quick, and then the dominoes stand back up very slow. That being said, USO literally got caught like individually, them as just an individual company. It's almost like they had their own recession because they got caught up in a bad position within the oil market that just crushed them. They pretty much held all the oil contracts when the pandemic happened and nobody was driving, and then the oil prices crashed, and so they lost a bunch of money. The likelihood that they're going to see a win of that size instantaneously, probably not going to happen because USO got hit by an anomaly. It was just so unexpected that no one saw it come. They got hit by a black swan and smoked. What's the likelihood they catch a black swan to the upside now? So we expect recovery to probably be slower, not so fast, okay? I think it's going to be maybe somewhat of a quick recovery, but still slow. Like if you go look in the past, right? In the past was the past, right? This was a pandemic and things got way out of whack here, right? So I think maybe we could be quicker because the oil markets got crushed, so they should have a bigger rebound because, right, bigger the drop, bigger the rebound. So oil markets should rebound, which they already have, some, slightly fast, but an all-time high back to where they were recovery got to be somewhat slower, right? Honestly, the best thing that any of you guys can do if you've ever considered joining us, right? You know, the best thing is honestly just go to the website, just kind of briefly read what it is. But honestly, just join the chat room, the free chat room, and then just direct message anybody who has a red name or a green name and they're currently a paying customer with Boiler Room Trading. And that's the best way that you can get, feedback on how our service is, right? That way you're not getting my biased opinion. You're hearing from people that have already traded with us, some people have stuck with us for 3-4 years almost, right? We have had customers that have joined with us from day one and have never left. So speak to the customers. Some of us like it, some don't. Depends on the style of your trading and if you like my groove, okay? So join the chat room and speak to anybody who's a paying customer at Boiler Room Trading first, okay? Now, let's go into, we're going to go into one stock that I for sure am watching today, which is BJ. I know some of you are laughing right now. So we're going to be watching BJ's. I can't say the word without you know what. So it's, maybe we shouldn't trade this one today. BJ. Anyways. I'm just going to, so we can just get off this ticker because I can already see myself taking this to the extreme of jokes this morning. We're just going to get off. We're just going to get off on a BJ here. And we're just going to go bearish. Okay, we're just going to bet that the BJ's not coming through this morning. You know what I mean, Jelly Bean? So we're going to bet bearish on BJ's for a lot of reasons. But I'm not saying it can't go long, but I'm just going to be bearish for now for the time being. I went over this whole long plan earlier with some of the premium traders, so I'm not even in the mood to do it again. And so we're just going to stay bearish for now. We're kind of doing a double top situation maybe. So we're first going to play double top scenario and bearish first on BJ's. All right. And that's really like all I've looked at today. Other than that, I've had a lot of messages to go through this morning. So I think I'm going to take most of the time here and start looking at some of the guys, some of the recommendations from you guys here. We can do. Yeah, we can take a look here at ACB. I already looked at ACB this morning with some traders, but we'll definitely look at that. CHFS, I don't know if they did the reverse split. I'm not following. Oh, yeah, we're going to look at BBY, Best Buy. Totally forgot about that one. BIDU, I guess I'll take a look at. I don't normally trade BIDU or pay attention to it too much. BIDU, Baba, but you know. The chat room's $30 a month. Honestly, we just always run a 20% sale, which we always allow a 20% sale. So it's honestly just type in 20%, literally the number 20 and the word percent, no space, and you'll get a discount. So we're not really sticklers. We're just, So, yeah, use 20% at checkout. All right, so let's start here. ACB. So a lot of people are following, had earnings a couple days ago, shoots up, everyone's like, wah! And then it crashes. Not surprising. All right. So ACB bounced overnight. There was some news of something. I can't remember. Whatever it is. Aurora Cannabis deal includes a potential earnout of $45 million over 2 years. Something. Okay. So basically, they're reporting earnings from the past couple days. New news is coming out about a new deal. I think it's okay. I don't necessarily want to be short, but I don't want to be long here either. Maybe. I'm debating. Either way, I'm just going to go ahead and put it out. We earlier had mapped off kind of $15.34 and $15 as a potential dip buy zone. I'm not super crazy about ACB today, but if it were to drop down to $15.25 to $15, I think you have a potential bounce starting there, or at least an attempt where you can buy in on the low, see it jump up, and if it fails, you have enough time to get out before it's red. So that's what we would be watching, but this is not going to be of our big candidates today. All right, so I'm going to head over to BBY now. Best Buy. So they reported earnings. First thing we're going to do is check our large time frame. Dinked resistance. Selling down through half standard deviation. We have no support for a little bit. Yeah, so we can probably... We'll price target 75 on BBY for now. Actually, that might be pretty hard to get to. I don't know if we'll... You know what? We actually... Let me think. Best Buy. Yeah, we'll target lower today. I'm going to say Best Buy can have the potential to fade out today. Normally, I would not be extremely bearish on something like this given where we're at, so I'm not going to say that for now. First, I'm going to look for maybe a quick down move into 67, look for a bounce, then a short. I know that's a lot to take in, but... So here's the thing, is if I look at the 4-hour chart, there's really no reason for me to be long bias on a 4-hour chart or a longer time frame until 75, right? So when I look at when I look at Best Buy, I have no reason myself that really gets me going to be long until like $75. So if I'm thinking to myself, I don't want to be long, right? Then... Right? If I don't want to be long there, then I should stay short, right? If I was in a short position and I asked myself, where would I want to long the stock? If I wanted to long the stock for a bounce and be profitable, where would I do it? I would do it at 75. Well, if I'm going to do a bounce at 75, I'd say I should just stay short bias until 75. So I don't want to be long Best Buy until at least a price of 75 on the day. So the smart thing Connor should do is just stay bearish until 75. Whether or not it even happens, it doesn't matter because you at least stick to your plan. So the plan for me is 75, bounce. Boom. Watch the thing go to like 80. Like, I suck. I'm an idiot. I'm terrible. I have no clue what I'm doing. Absolutely no clue. So that's Best Buy. We can take a look at BIDU here real quick. Hold on. So BIDU smack down. That's awkward. Big drop there. It's got to be coming from something. Yeah. Makes sense. So they just had earnings. They just ran into resistance, I think. Yeah, I mean, close, arguably. Yeah, half standard dev. Yeah, I mean, they came from the bottom. Now we're here. That's all we got to say there, baby. Like Drake. Started from the bottom. Now we're here, right? So he started from the bottom, 82, ran all the way to 120, up close to 124. It's basically resistance, sold off on earnings. Makes sense. Now you're kind of back down to half standard deviation. Check the 4-hour. There's no... I don't like BIDU. I can't really wrap my head around this one successfully enough to really want to trade it. I can tell you intraday that you're going to want to be long off the yellow, off the... You're definitely going to want to be long off the red, 100%. Hits the red, you're going to want to get long. That's the only thing I can tell you on BIDU for now. I don't know enough and haven't watched it enough. I don't feel comfortable with analysis there. Are you dumb for buying Amazon puts for next week? Well, brother. Well, one thing's for sure. You can kiss that money goodbye. No, I have no idea. Actually. Yeah. Yeah. Probably. I don't know what your put prices are, but I mean, well, hold on. Let me delete some stuff off this chart first. There's a lot going on. And then let's start with the daily chart. Actually, you know what? Gotta say, you might actually turn out pretty darn lucky. Like, you actually have a pretty good chance of being right. Gotta say. If there was one time to buy puts, you actually probably bought them at the right time. Maybe. For sure, you would have won if you bought them here the first time we tagged the green. So this is second attempt at previous high. We're already into an all-time high. Hold on. So really, there's two things I'm looking for. I'm looking for a bearish divergence. 4-hour time frame still has up to 266. Daily chart arguably is right on. So here's the thing. It's typically whenever the price reaches 2 standard deviations, which is our green, we'll normally trade opposite the market first time. So first time Amazon got up to the green, we would have went short and we would have won. Right? Now we're on to the second attempt. So second attempt is more likely to break than the first attempt. But this one's also pretty likely not to break too. But Amazon also has a lot of strength, and it's just not a company you bet against, right? They still run the whole world right now. And this pandemic only made them stronger. So no, you don't bet against Amazon. Not on this one. You could have the first time, but that was the first time. So that'll be my number one rule. If any 482 of you people watching the stream this morning take anything away from this stream, it is that when price moves into resistance, first try, you always trade opposite. Always. Always. Every time. Okay? Every time. First attempt at support long. First attempt at resistance short. So when you were taught by Google or whoever that the more times... Hold on. Hold on, we're almost there. So you're probably shown something that looks like that, right? Does that even, can you guys see that? Maybe if I turn down the light, maybe a little bit. I don't know. But if you're taught anything that looks like that, like the more times it bounces on support, stronger it is, that is just not right. It's truly not entirely correct. Yeah, so I'm looking at the video now and it looks terrible, but you can't really see that. But anyways, the more times a stock bounces on support or a level doesn't necessarily dictate its stronger support by any means. It doesn't. In fact, the strongest support is usually the first try. Okay, so let me explain. Look at first attempt at support, strong bounce. First attempt at resistance, good rejection. Those are the strong resistance, strong support, okay? So, but you could be like, oh, well, look at bounce, 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 strong support, right? Well, what about that? Just snap right through. So, that's what I mean is you might be saying, oh, look at that strong support. We've been bouncing here, and then look at snaps through. Because that's how the game works. You're taught by the people that want to take your money, probably. Again, do you even know? See, when everyone talks conspiracy, it's not conspiracy, okay? I mean, like, you just got to use your brain, right? Media stations broadcast shit to sway your mind one way or the other that inevitably actually benefits them in the end, okay? Do you even know, do any of you guys know who owns Investopedia? Do you know who owns Investopedia? A lot of the information on there is great. I'm not bagging on Investopedia by any means necessary. Great information. But when you figure out who owns them, it will make you question things. Just like when you have to question the media and the stories that people tell you. Same thing with Investopedia. When you actually figure out who owns Investopedia, it will make you question if some of the things you're reading on there for your benefit or for somebody else's benefit. That being said, It is very common that you will be taught support. The more times it bounces on a level, the stronger it is. To a degree, that is correct. But look what happened here. We went right through, snapped, and then the market ripped, right? Because the market knew exactly where a bunch of stop losses were at. Everybody who dip bought this had stop losses, not knowing that trending, all-time trending support was right here. So not that the people were wrong for buying here, they would just be wrong for stopping out right here before the price starts closing and actually breaking below the green and moving down, right? So they all got stopped out right before the rip. This is a great buy point. That's a first attempt at support. That's your first attempt at support. That's a dip buy. You'd rip that, okay? It's 9:02. I gotta go home. I gotta get out of here. I gotta shut this shit down. All right, everybody. Thank you once again for tuning in. I appreciate your time and hanging out with me in the morning. I absolutely love to do this. This is super fun. I get to wake up every single day, do what I love, talking to a microphone, look at stock charts, talk to basically myself all day long, and I actually really talk to anybody. So it's really just me talking to a camera, and it's really just a good time. It's just great. So appreciate it. Thank you guys for tuning in. I will see you guys tomorrow. Other than that, I have nothing else for you. All right, guys, take care. Have a great day.